Good afternoon, everybody. I'm associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There's the position disclosure there. I got out of Apple, I got out of Bob also. I got into Target, I got back into pins, I got into a little S after hours. Position disclosure. Okay. Yeah, so market gave some real continuation today. How did we close in the day here? SPYs are up a percentage point. Qs are up 1.25%. IWM's up 1.1. It's interesting that the Qs ended up being up more than the IWM because the IWM was the early leader today. Let's take a look at some charts. So I got the daily chart up right now, so I guess let's just start with that. Really good continuation, right? So we got a little bit ahead of ourselves, especially with the NASDAQ a couple days ago. Oh, thank you. We got a little bit ahead of ourselves, especially with the NASDAQ just a couple days ago. We had a good technical price correction. We pulled right back to the 80 in the daily chart. We created a little bit of a downside tail there yesterday. And then we pivoted up and gave continuation. This is exactly what you want to see if you're bullish. 4,200 was a little bit loose, but we closed right around at it yesterday, and we broke back above. So we are more or less. Let me turn this off. We are more or less confirming that breakout. We're starting to. So really good move here for the S&P. It's exactly what you want to see if you're bullish. The Qs didn't even correct all the way down to that 80 EMA. It just shows you how strong the NASDAQ is. At one point this morning, the Qs are relatively weak. They ended up playing catch-up and closing above the SPYs and the IWM on a percentage basis. So it's definitely bullish, and it's great that the IWM participated, though I wouldn't characterize it as rotation. It's not like Qs are building out a bull flag in this extended territory, though you could argue maybe they still will be if there's no continuation tomorrow. But we didn't see rotation today, for sure. Qs gave a nice upside move after a 2-day correction, and at least we did get some IWM participation today. We certainly didn't close above the 178 to 180 level that we've really been wanting to see. We tested 176, which has been an important inflection area for the market recently, but we were not really able to close above it. So I still wouldn't call it the most ideal situation for bulls, but there's certainly some improvement today. The Qs are a little bit extended to the point where the Qs were almost getting to the spot where I wanted to short again. I think I said at about 3 p.m. Eastern today that if the Qs got to about 354, I might look to short. But I would rather do that on like a gap up tomorrow than start shorting into the close today. Mainly what I was doing today was just kind of continuing to piece out of my longs a little bit. But yeah, pretty solid here. Continuation from the Qs. And going back over to the intraday price action, I'm just watching this refreshing seller in asset 14. The seller has stepped all the way down and has been absolutely ruthless and relentless. But if anybody's watching their tape or wants to learn some tape reading, just look at this NASDAQ refreshing seller at $14 on S. That seller can break this thing, maybe could pop a little bit. That seller's been relentless, has been stepping down for like $2 in this thing on the way down. But it's finally, this S has finally reached a spot here where there's also been a lot more buying that's been coming in, and I think that has to do with 14 being a really important daily level. So I've been starting to build in here into this 14 level, maybe a little bit heavier than I should be considering it's after hours. There's that break. Nice pop on that break. Oh, that's exactly what I was looking for on the break of a seller. Exactly what I wanted to see. Now the question is, does that seller come back? Oof, hard down tick right there. Sorry, give me 1 second here. Sometimes it's hard to trade and do these afternoon meetings at the same time.
Since I give you advice.
I'm on the radio, just so you know. Just hopped onto it. Ladies and gentlemen, the Chief of Compliance. Hold on, I just need to see what I just did with this S. So I bought there, and then I sold 1, 2, 3, 4, and then I bought 1, 2, 3, 4. Now offered 1, 2, 3. There we go. Anyway, basically what I was talking about is that the market did more or less what we needed it to do today, but I'm still a bit concerned about the Q extension. Oh, there's that pop again. That's what I keep looking for. And you could see the relative strength early on in the IWM. Let's go over to a 5-minute chart. First of all, beautiful trend here for the most part intraday after a little bit of opening selling. And then opening selling has still been something we've been seeing very consistently. And I think that that's a function of the 0 DTE option stuff that we have been spending a lot of time kind of discussing here, where we get these opening sell-offs and then we get these roundups during the day. But you can see here that the IWM went green first, pulled back a little bit with the rest of the market, but this IWM was taking off at like 10:35, was looking really beautiful, and then everything else was playing catch up with these Qs being a little bit more grindy to the upside. I had some computer issues this morning, which were extremely frustrating, and at the same time, it gave me a really good additional appreciation of the team that we have here. Because due to those computer issues, I was not able to do the typical research that I like to do on a day-to-day basis. And I didn't feel prepared as far as the stocks I was looking at and whatever. And it was you guys that made me the money. It was Joe Juma, who is joining us as a guest, but I know him really well. He used to be on the trading floor with me in, like, I don't know, 2014 or something like that, who put Carvana on my list and told me, I guess, about a little bit of an upgrade. So I started buying that Carvana as soon as I got onto Lightspeed, basically, and saw that he posted that information while Pat was doing the meeting. This got upgraded. The chart looked great. It was already beginning to break out a little bit on that daily chart and gave awesome continuation. I was more or less looking long versus like yesterday's high area into the $13. Great opening uptick. This down tick was a little bit bigger than I want to see. And that's actually when I had another computer issue, which didn't let me trade it here into this $13 area and canceled all my orders, which is kind of interesting. Hard to say if I would have gotten stopped out or whatever else otherwise. But then it pivoted there and worked up and turned into this beautiful uptrend. So that was great. And then AI, $30 is a level, and I think I might have mentioned that if this thing could get into $30, I might be looking at it as a buy, and I wasn't watching it, and then J. Cole in the VTF typed in, hey, AI is approaching 30, and I got involved in this. I literally bottom ticked this. I think I bought $30.26 today, which was just awesome. I was all out by 35. It was a beautiful trade for me. It gave a couple bucks extra intraday, but just really, really, really good trade. And again, I just want to express my appreciation to the team, because we are a team. And I think that, you know, we feed off of each other. So today it was you guys giving it back to me. A lot of other days I like to think that I can help make you guys money as well. We've had some great call outs overall over the course of the last couple of weeks. So again, big shout out to the team for today, because I felt unprepared and you guys kind of came in and saved me a little bit. So that's pretty much all I've got. I'm happy to answer any questions that you guys have. And I don't have the YouTube up, so if there's any questions in YouTube, if somebody can copy and paste those, I would appreciate it. First thing I'm seeing here is from Denver Steve. Question about how orders are filled. Are stops handled just like limit orders and market orders? They're handled a little bit different. First by price and then by time place. Reason I ask is because I took a small position in ASAN today, a less liquid name, and right at the close the stock plummeted, and luckily my stop order had already auto canceled, so I was not stopped out. I gave it a lot of room because I wanted to swing it. I guess the general question is, when you trade less liquid names, do you ever consider using alerts or stops? Instead, because of more likely to have big spikes in price that quickly correct. You got to be very careful with that, because the flip side of that is that you're dealing with less liquid stocks. And this is one of the reasons why I don't like trading less liquid stocks in general. I like my stocks having good liquidity so that I can enter and exit easily. Because like on the one hand, if you get that quick spike because it's a liquid, it can trigger your stop and you can get some slippage on it, and that can hurt. But on the other hand, if a less liquid stock starts really moving against you because something's actually going on and you don't have that stop in place, it's a recipe for complete disaster. So I generally just try to trade stocks that are more liquid. They're better for me. It doesn't mean that I don't trade names that are illiquid and that are spreadier. I do, but if I do, I trade them with the same rules that I would trade a thicker stock. So if it's a trade that would require me having an appropriate stop loss in, then I make sure that I have that stop loss in. And if it's a name where I'm very light and maybe a little bit looser, then I don't always have that stop in, though I always recommend that newer traders always trade with stops. So I don't change my process. Stops are held on the front end. They're not held at the market, is my understanding. Like when you put in a limit order, that's held at the market level. When you do a market order, it executes immediately at the market level. But when you are doing a when you're doing a stop loss, I think it's held on the front end. I don't exactly know what the implications are of that from an execution perspective, to be totally honest with you. But I hope that helps. Oh, and I took that Target trade also, and I made money in it, and I forgot about it until I saw DJ here, and I'm still in it. But DJ's question: if you're unable to catch the bottom on a beaten up stock like Target, are you still willing to look for continuation setups on the intraday time frame, or will you generally only try again if you get another counter trend trade set up near lows? So I'm willing to look for continuation setups, but it depends where it is on the daily chart. So the problem when you're taking counter trend trades and if you're late is that by the time it's very easy to be so late that the stock has already bounced back to equilibrium. And in that case, I really don't like continuation setups. In this case, Target is so incredibly extended on the daily chart that you may be able to actually take continuation trades on the intraday, because even at highs at 132, you still have $7 of room to where the ADMA is on the daily chart. So this thing is just extremely extended. That makes that a possibility. But I would say that most of the time I don't want to do that on my, because this account, even if you're taking like a continuation trade, which usually inherently means with trend on the small time frame for this thing, it's actually still a counter trend trade because of what the daily chart looks like. So most of the time, if it's counter trend trade, you do not want to be late, because counter trend trades tend to fail. You have a worse risk reward, and the more the thing bounces, the more difficult it is for continuation. This is maybe a little bit more of a unique circumstance, because day 7 down, Target here was $13 of extension away from the ADMA on the downside, which I don't trade Target a lot to know if that's a lot, but I would assume, based on the type of stock it is, retail, that it's usually not a really big mover. So getting $13 of extension on the downside from the ADMA on the daily chart and Target is probably a really extreme amount, and that could enable you to do that type of trade in this circumstance, whereas probably most of the time you can't, if that makes sense. So thanks for the question, DJ. From Kyle, a couple of questions with Carvana. With your first buy, if this had kept dipping, would you have been adding more and risking to 12? Let's start with the first question first. So one thing that you have to remember is that I'm already swinging Carvana, and in that overall swing trade, I do have like a very large profit cushion in it. I've done extremely well with this thing. I think I bought it at $8 on the earnings report, and I still have that position. And by the way, not to go on a tangent, this is what I'm always talking about swinging positions when you're in win-win situations and they close well in your favor or whatever it is, because you never really know what this could get to on the upside. Like, at highs here on a $10 stock, when I got in, it was $8 stock. I've made over 100% move on this thing, on that core position. So one thing that you got to remember, just when you're thinking about my game plan, if you're asking me about my game plan, is I'm coming into this with a very large profit cushion. So I can afford, for this trade, for this name, to be giving it like a good bit more amount of space and risking some of the profits that I've already made in this thing for continuation. Roughly, I was eyeing $13 as a stop loss. Kind of that yesterday's high area, kind of where the 80 MA on the daily chart is beginning to catch up on. I did not have like a hard stop loss in, but I was looking at $13, and I was also looking at at yesterday's high. Kind of that area is the area to be long against. I started buying at 1466 in a very small way pre-market, and then I was sorry 1366. 1366 in a very small way pre-market, and then I ended up getting a lot heavier around that 1350 area where I had a pretty good position on it. But I wouldn't risk the new size all the way down to 12, but definitely my swing position I'm giving to probably $10 still at this point, because again, I'm in a win-win. I'm looking to trim and trail and all that good stuff. So that's the first part of your question. Second part of your question, if wanting to buy using the 950 candle, once you see all that volume coming in, buying back through $14 fine, or is it fine? The problem is the stop loss. So yes, it's fine to buy through there from a technical entry perspective. The problem, I think, is the stop loss on the risk reward. Maybe you can be giving to the low of that bar because the volume was so big. That's 40 cents risk. The more ideal stop is the only pivot that the stock has had so far. Now you're talking about, but if you do that, you're talking about risking 85 cents in a $14 stock. So short answer is yes. From an entry execution perspective, I think it's fine. Long answer is that from a risk reward perspective, I don't love the $14 entry. Yep. From Scarlett, can you please walk me through your morning research and market prep? Are there certain websites you favor? I pretty much exclusively use the virtual trading floor. So I just changed locations again. I had a very comfortable process when I was in Idaho, and now I'm reestablishing a process for myself now that I'm back here in New York on days when I have to come to an office because it requires me to commute down to that office, which I don't like to do, because I've got swing positions on and the market is moving. But generally, I like to first log in and monitor my swing positions based on how we're gapping. If we're gapping up, take a little bit of them off maybe, or if we're gapping down, I might be adding a little bit, really before I start my research. My research itself really starts at 7:30 in the morning when Pat logs in and first posts news. He always starts with those macro summaries, and I read those first. And then I start working my way through the news, the big picture news. And then once I see that Pat starts to post more individual stock news, I take a step back. And I do my big picture market research, my big picture game planning. So what I'm doing there is I am looking at the technicals, the daily chart technicals of the S&P, NASDAQ, and the IWM. And I am, trying to figure out the probability of, could we break out today? Is there a support level nearby? Are we opening in no man's land? What does extension look like? So I start with those big picture technicals. I'll look at it in conjunction with the gap itself. What type of gap is it? How big is the gap? And then based on that, I create a big picture game plan for myself on my general market expectations. I think that I should be looking long today, looking short today, or the market's not giving me an advantage. After that, I go into my individual stock research. And again, this is all coming through Pat. I look through every earnings name that Pat posts, every upgrade and downgrade that Pat posts, every stock that has news that Pat posts, and I do that for about an hour. So I've got my big picture game plan is generally set at that point, and now I'm coming up with my list. And you can see the list that I post in the alert section every day. Pat was nice enough to jump in and do the meeting for me today because I was having tech issues. But I post that list of my individual stocks every day. That list is being built out for me between 7:30 and 8:30. At about 8:30, that's when Pat posts his morning note. So I stop my micro research. By micro research, I mean individual stocks, and I read Pat's note to have a better macro understanding of certain market fundamentals, positioning, sentiment, things like that. That can help evolve my broader thought process to some degree. And then by that point, it's 9 a.m. and I'm doing the morning meeting, and I present my findings to you guys every day. And I do it in the same way. I start with the big picture. These are what the big picture technicals are looking like. Sometimes I'm having to update my information on the fly because I wrote down my big picture technical thought process at 7:30 in the morning, and now it's 9 a.m. Things can change over the course of an hour and a half, especially if an economic number came out or something like that. So sometimes I'm updating my thought process on the fly, but basically I'm presenting that thought process to you guys as I see it. What does a good game plan look like based on big picture technicals and the market gap? And then what does the small picture game plan look like? And what I mean by that is individual stocks, what levels for individual stocks I'm planning on looking at for that day and why. So that's pretty much it. I generally don't use anything except the VTF. Shane sometimes posts a daily chart report, which is a link that I'll take a look at. Every once in a while, I'll be hopping onto a FinViz or a Yahoo Finance just to be looking for some additional information on an individual stock or something like that. But for the most part, I don't need anything for my trading to be successful at this point outside of the virtual trading floor and my trading software. So appreciate the question, Scarlett. And I think you're new here, so welcome to the team. Anyone else have anything today? Was there anything on YouTube? Otherwise, I will wrap it up and continue to manage this position that I bought into here. David Dean on YouTube. If you are planning multiple entries for a new position, do you prefer the first entry to be the largest or smallest in proportion to the rest, or do you like them to be equal? It depends on the type of trade that I'm taking. For momentum style trades, I usually would only have one entry. For like support resistance type of trades, it can be a little bit more of a build-in process, but sometimes it's like I'm taking a bigger position of it kind of all at once with a plan to average down a little bit if it pulls against me, in which case I have a bigger initial entry and then smaller subsequent entries. Sometimes it's I don't love this pricing, but I want to be involved, so I take a small position and then I have a game plan to be able to build in bigger with bigger entries at better prices if it gives me the opportunity to do that. So I do a little bit of all of it, and I would say it really depends on the specifics of the trade itself that I'm taking. And thank you for that question on YouTube. Okay, cool. Well, it looks like I got through everything at this point, so I'm going to wrap it up. I'm going to a concert tonight, which I'm excited about. Smaller band called Rival Sons, so it should be pretty cool. Looking forward to enjoying some of this New York City life now that I'm back at it. I gotta take advantage of it. So have a fantastic night, everybody. I will see you all tomorrow.